President, reserving the right to object to what I expect to be a unanimous consent request with regard to SJ Resolution 95. The resolution seeks to overturn a Trump administration IRS notice providing simplified guidance on applying the corporate alternative minimum tax to partnerships. The corporate alternative minimum tax is a fundamentally flawed, Democrat-enacted book minimum tax. Not one single Republican voted for it. As Republicans predicted, the book minimum tax has proven to be highly complex and burdensome. Even President Biden's own Treasury Department acknowledged its dizzying complexity. They waived penalties related to it for 2 full years due to the, quote, continued challenges, end quote, of compliance. The Trump IRS notice at issue today reduces compliance burdens, making it easier for businesses to calculate their liability. Democrats gave Treasury extremely broad discretion to implement the tax, including on complex issues like how it should apply to partnerships. The notice is within the Treasury's authority, but the Democrats dislike the outcome. Approving this resolution would revive ambiguity, inviting audits, litigation, and significant compliance costs. Therefore, I register my objection when the unanimous request is made.
All right, folks, buckle up, because what you just watched in that Forbes breaking news clip is a perfect example of why Washington is so divided and why conservatives have to stay sharp. You've got Senator Mike Crapo standing up and blocking a Democrat resolution to overturn a Trump-era IRS notice. And immediately, Democrats act like this is some massive corporate giveaway. But let's actually break this down like grown adults instead of repeating talking points.
Regarding corporate taxes and partnerships. When you start using a whole bunch of Washington lingo about the corporate alternative minimum tax and income allocated across partnerships, people go to sleep in a hurry. So I'm going to explain it as simply as I can. The Trump administration treats the U.S. Treasury Department like Make-A-Wish for corporations and private equity. Any giveaway or special treatment an ultra-wealthy corporate executive can dream of, the Treasury Secretary and his crew are there to move heaven and earth to make it happen. With respect to the resolution we're voting on today, the question is whether the most profitable corporations and private equity giants in America, those with profits north of $1 billion in a single year, ought to pay a minimum tax, Madam President, of 15%. Now keep in mind that 15% is roughly the tax rate you pay if you're a middle-income household, a nurse, a firefighter, or a couple of school teachers. Democrats say those hugely profitable firms ought to pay a 15% minimum rate. The Trump administration and Senate Republicans say no. And since Republicans have unified control of government, the big corporations can get exactly what they want in America. The Trump administration tore a giant hole in the minimum tax with a new policy change, a change that amounts to a $10.3 billion corporate handout. And that's according to the Joint Committee on Taxation. Now, it's been the case for decades that these huge corporations play financial games to conceal their profits from the IRS. That's how they winnow down their tax rates to single digits, maybe, Madam President, even zero. The same goes for the private equity giants. They report to their shareholders and investors that profits are booming. Everybody celebrates. Share prices and executive comp go up. It's party time in the C-suite. Then the financial chicanery and trickery begins. They fudge the math, and when it comes time to report earnings to the IRS, suddenly these corporations and private equity firms They're out there hollering about poverty. Forget that they told the shareholders they were swimming in cash. Suddenly they claim they owe little to nothing in taxes. This kind of tax rate gamesmanship is why Democrats created the corporate alternative minimum tax in 2022. The minimum tax has only been in place for a few years, but already corporations and the private equity crowd are trying to rip it to pieces. And clearly, the Trump administration is helping them. The $10.3 billion handout never got any debate here on the floor of the Senate. It didn't even come from any legislation. The administration created it out of thin air. It's a hidden piece inside a part of federal rulemaking with a very deceptive bureaucratic name. It's IRS Notice 2025-28. And the topic is so bland, Madam President, if you don't have a background in tax policy, you might not even catch on to what it's all about. The notice rewrites the rules that govern how corporations and private equity firms count income from the partnerships they own. They get to pick from 6 different methods, 6, for counting their cash, adding a whole lot of complexity to a part of the tax code that's already like root canal work just reading it. Essentially, these firms get to play a game of choose your own tax rate. I repeat, they can play a game of choose your own tax rate. The Trump policy encourages these giants to set up and abuse partnerships, layer after layer of red tape, solely for the purpose of dodging taxes. It's got nothing to do with creating jobs or launching new product lines or areas of investment. It's just a matter of moving money around on paper until you're able to make sure your taxes just go poof. These big profitable corporations and private equity firms got a great deal from the Trump administration last year. This debate is about a simple change in policy from the Treasury Department that handed them $10.3 billion. If you ask me, they've already gotten enough from the people in charge. The Trump administration and Republicans gave them $1 trillion in new tax breaks in the budget mega bill they passed in July. Somehow that wasn't enough, Madam President. The Trump administration junked an effort to crack down on another partisanship abuse, something known as basis shifting. That's when businesses dodge taxes by moving assets around from one operation to another. Again, this provides no value to our economy. It's just a big tax game. But the Trump administration doesn't have any problem with that, so they put the green light to the tax games and said, okay, everybody, not going to be a crackdown. That was worth $100 billion to these same corporations and private equity giants. Today, I ask my colleagues, when is enough actually enough? Millions and millions of families in Oregon and across the country struggle to get by, buried under the rising cost of living. Federal deficits shoot through the roof. The job market looks shaky. Young people tell us there's not any opportunity for them to get ahead. This is a slap in the face to all those Americans every time the Trump administration gives another handout to huge corporations and the ultra-wealthy. They believe the system is rigged, and they are right. It's rigged because the Trump administration, as I said at the outset, treats the U.S. Treasury like Make-A-Wish for big corporations and private equity. The ultra-wealthy and the mega donors get what they want. Everybody else gets short shrift. So the resolution I brought before the Senate today is better. This isn't about the federal government clobbering big corporations with big taxes. We're talking about a minimum contribution, Madam President, a 15% tax rate that a lot of people wouldn't even consider to be actually a fair share for these big corporations. The biggest, most profitable corporations and private equity firms don't need a special carve-out. They don't need any more Trump giveaways. So today I ask my colleagues to support this resolution. Let's block this latest handout to the mega corporations and private equity giants that really do not need it. I now move to proceed to Calendar 297, SJ Res 95.
The clerk will report.
Motion to proceed to counter number 2.
First, what are we talking about? The corporate alternative minimum tax. The so-called book minimum tax Democrats jammed through in 2022 without a single Republican vote. Not one. That should tell you something. Republicans warned at the time that this tax would be a bureaucratic monster. And guess what? That's exactly what happened. Even Biden's own Treasury Department admitted the thing was insanely complicated. They had to waive penalties for 2 years because businesses literally couldn't figure out how to comply. That's not conservative spin, that's reality. So what did the Trump administration do? They issued an IRS notice to clarify how the tax applies to partnerships, which are extremely common in America. Small businesses use them. Investment firms use them. Energy companies use them. This is not some fringe issue. The Trump IRS said, here's simplified guidance. Here's how to calculate liability. That's called regulatory clarity. But Democrats, they're furious. Why? Because in their view, if a rule makes compliance easier, it must be a giveaway. Now, let's talk about Senator Ron Wyden's argument. He boiled it down to this emotional appeal. Should billion-dollar corporations pay at least 15%? Sounds simple, right? But here's what they don't say. The 15% minimum tax is based on financial statement income, not traditional taxable income. That means companies are being taxed on accounting numbers designed for shareholders, not tax law. Those are two completely different systems. This isn't about corporations paying zero. It's about whether Washington can invent a second tax code layered on top of the first, and then pretend it's simple. Wyden calls this a $10.3 billion handout. But what is it really? It's preventing bureaucratic chaos. It's stopping vague rules that would lead to endless audits, lawsuits, and uncertainty. And let's be honest, uncertainty is poison to investment and job creation. The left loves to frame every corporate tax discussion as mega donors versus school teachers. But here's the reality. When compliance costs explode, when audits multiply, when regulations become unpredictable, companies pull back. They delay expansion. They freeze hiring. They reduce risk-taking. And guess who pays the price? Workers. Retirees whose pensions are invested in those companies. Small businesses structured as partnerships. Communities that rely on major employers. The left pretends corporations are faceless villains. But corporations are made up of employees, shareholders, retirees, suppliers, regular Americans. Now, do I believe in fairness? Absolutely. Nobody is arguing that profitable companies should pay nothing. But there's a difference between fair taxation and politically weaponized taxation. Wyden claimed corporations choose their own tax rate under this notice. That's catchy rhetoric. But what's really happening is Treasury giving technical guidance on partnership income allocation, something Democrats themselves gave Treasury broad authority to do when they wrote the law. They handed over that discretion. Now they don't like how it's being used. That's not corruption, that's governance. And here's the bigger picture. Folks, this fight isn't just about $10 billion. It's about philosophy. The left believes government should squeeze large corporations as a show of moral virtue, even if the system becomes unworkable. Conservatives believe in competitive tax policy, clarity, and predictability. You want companies to invest in America instead of overseas? You don't do it by turning the IRS into a maze of political punishment. You do it by creating stable, understandable rules. Wyden also brought up the so-called trillion-dollar tax breaks in the mega bill. Let me translate that for you. Lower tax rates mean companies keep more capital. More capital means expansion. Expansion means jobs. That's not a giveaway, that's economic growth. And here's the irony. Democrats complain about deficits, but their solution is always higher taxes and more bureaucracy, never spending restraint. If Washington really cared about fiscal responsibility, they'd talk about the spending side of the ledger. Instead, it's always raise corporate taxes. Because it polls well, because it sounds tough. But governing is more complicated than campaign slogans. Mike Crapo understood that overturning this IRS notice would create ambiguity and legal chaos. That's why he objected. That's why he blocked it. And that's why this matters. Because once you start letting partisan outrage dictate tax administration, you destroy trust in the system. The left says the system is rigged, but constantly rewriting rules based on political pressure, that's how you rig it. Here's my take as a proud constitutional conservative. Taxes should be simple. Rules should be clear. Enforcement should be consistent. And government should not treat success as a crime. If a company is gaming the system, illegally prosecute it. But don't create a tangled web of vague accounting mandates and call it fairness. At the end of the day, this debate is about whether America punishes scale and success or encourages stability and growth. And I stand with policies that keep America competitive, not hostile to its own job creators. What do you think? Is this responsible tax clarification, or is it corporate favoritism? Drop your thoughts in the comments below. I read them. And if you want more breakdowns like this, no fluff, no media spin, hit that like button, subscribe, and turn on notifications so you don't miss the next one. Because the fight for economic freedom isn't over. Not even close.